Portland has nearly 9,000 homes for sale right now, the highest we've seen in years. And with almost 40% of sellers already cutting prices, this is not the same market we were living in just a couple years ago. Something is shifting in our housing market, and the data is starting to tell a story we can't ignore. I'm Matt Jolivet, licensed mortgage broker in the states of Oregon, Washington, and Idaho, and right here in the Portland metro area. I have over 25 years of experience, and I've been through the dot-com bust, the 2008 crash, the COVID frenzy, and every cycle in between. And look, I've got to tell you, what I'm seeing right now feels less like a crash and more like a slow squeeze on affordability and demand. And when I say Portland, I'm not just talking about inner city Portland. I'm looking at the Portland, Vancouver, Hillsborough metropolitan statistical area. That's the official federal definition of our housing market. It's a broad reach. Multnomah, Washington, Clackamas, Clark County in Washington, and even parts of Yamhill County. Also, just so you know, I'm recording this in September of 2025, so all the numbers I'm about to walk through are the most current data available for our market right now. And here's the key. Not every area is moving the same way. Inner Portland might be slowing one way, suburbs another, and places like Camas or Wilsonville can behave completely different. I'll highlight where I'm seeing softness and where things are holding up. Here's what we'll cover today. The latest Portland housing stats that tell the real story, the unique local pressures shaping our market, and most importantly, what you should do if you're buying, selling, or holding in 2025. Section 1, what the numbers really say. The median Portland Metro MSA is about 554,000. That's basically flat, actually down just 0.5% from last year. To me, that says this market has lost momentum. Prices aren't rising like they used to, but they're also not falling off a cliff yet. Right now, we've got about 8,713 homes for sale. Back in 2021, it was under 4,000. Doubling inventory completely changes the psychology. Buyers don't feel rushed. Sellers can't assume multiple offers. We've moved from scarcity to choice, and in real estate, choice equals leverage for the buyer. Homes are now averaging 55 days on the market. In 2021, it was barely 30, and most sold in the first week. Now, I've got clients in Beaverton watching houses sit for 2 months before sellers finally blink and cut prices. And when sellers cut, they're not trimming a token $5,000. We're seeing $20,000, $30,000, even $50,000 drops. Almost 40% of listings are cutting price right now. That's huge. During the frenzy, fewer than 1 in 5 homes ever had to cut. Today, it's almost half. That tells me sellers are still pricing with 2021 in mind, but the market is dragging them back to reality. And the sales, they're down nearly 8% year over year. That's fewer people transacting, fewer deals getting done. Now remember, this is metro-wide data. If you drill down, the story changes. Condos in downtown Portland are under heavy pressure, while a single-family home in Sherwood or Ridgefield might still attract multiple offers if it's priced right. One metro, very different experiences depending on where you live. Section 2, local pressures unique to Portland. One of the biggest shifts is migration. In 2024, the metro actually had negative migration, down 0.19%. More people left than came in. That's a big reversal. For years, Californians moving north were one of the main drivers of our market. That stream has slowed way down. Population growth overall, basically flat, even slightly negative in 2023. That's the first time in decades we haven't seen steady growth. A housing market only grows long-term if people want to live there. And right now, the Portland, Vancouver, Hillsborough region isn't attracting people the way it used to. Affordability is crushing buyers. Median household income is around $100,000, but the median home is 5.6 times that income. A balanced market is closer to 3 or 4x. On top of that, it takes 44% of households' income just to cover the mortgage on a median-priced home. That's a wall for a lot of families. I've had buyers qualify on paper, but once they see that monthly payment, they say, Matt, we just can't stomach it. Remote work is another pressure. About 21% of Portland workers are still remote, but that's falling. Companies like Nike and Intel are pulling people back, and that's taking the steam out of the outer suburbs that boomed during COVID. And investors, they're cautious. Cap rates are only 3.5%. If you're not familiar, a cap rate is basically the return you'd make if you bought a rental property in cash. So if you spent $500,000 on a place and it nets you about $17,500 a year after expenses, that's a 3.5% return. The problem is you can get 4 to 5% on a government bond today with zero risk. So many investors, Portland real estate just doesn't pencil out right now unless prices fall or rents rise. On top of that, the vacancy rate has crept up to 4.6%. That's higher than it was during the frenzy, and it means more rental units are sitting empty. For landlords, that's just not lower income, it's higher risk. And when you look at the price to rent ratio, it's over 19 right now. In plain terms, homes are very expensive compared to what they can rent for. That's another reason cash flow is so tight. Again, this looks very different depending on where you are. A downtown condo with HOA fees, almost impossible to cash flow. But a duplex in Hillsborough near Intel, that can still work if you buy right. Same metro, very different investment stories depending on where you look. Section 3, what to actually do if you're buying. This is the first time in years buyers can take a breath. You don't have to write an offer on the first day. You don't have to waive inspections. You can negotiate. Nearly 40% of listings are cutting prices already. Use that. If you want to be aggressive, look in places like Wilsonville, Sherwood, or Camas. These markets have more inventory and sellers are more flexible. But if you want to protect your downside, stick with strong school districts. Those homes will hold up better even in a correction. If you're selling, you've got to be realistic. If you're still pricing like it's 2021, you're going to sit and then cut price. Better to price competitively up front and get real buyers in the door. Expect 60 to 90 days on the market. That's the new reality. If you want to stand out, consider a rate buy down or a closing cost credit. Buyers notice that more than a small price cut. And if you need to sell fast, you'll need to meet the market where it is, not where you wish it was. If you already own, if you're sitting on a 3% mortgage, do not give it up. That's a gift. If you need access to cash, use a HELOC. Don't lock yourself into a 7% cash out refinance. And if you're thinking long term, this is a great time to invest in your property. Portland's ADU rules are some of the most favorable in the country. Adding an ADU not only builds equity, but it creates rental income. That's a great hedge against market volatility. And for investors, average rent across the metro is about $1,919, but with cap rates under 3.5%, you've got to be strategic. This isn't the time to just buy anything. Look for distressed opportunities, downtown condos, or small multifamily priced 20% below the peak. If you're a cash buyer, you're in the driver's seat. Sellers know financing is tough right now, and cash, look, it's always king. Just make sure the deal pencils from day one. This isn't a speculation market, and again, it varies. Urban condos are high risk, while suburban rentals near job centers, those can still work. Key takeaways. The Portland-Vancouver-Hillsborough housing market is correcting. Not crashing, but correcting. Prices are flat, sales are down, and affordability is stretched thinner than it's been in decades. And when I say correction, I'm talking maybe 5 to 10% downside in certain pockets, especially downtown condos in higher tax areas. But here's the perspective people forget. Over the last 5 years, home values in our metro are still up almost 28%. And if you zoom out 10 years, they're up nearly 80%. So even if prices ease back a little, that's not a collapse. It's a healthy adjustment for long-term stability. Markets can't go straight up forever. And a reset like this actually lays the foundation for sustainable growth going forward. And what about the next 5 years? Look, nobody's got a crystal ball, but here's what the experts are saying. Zillow projects about 1.9% growth over the next year in the Portland-Vancouver-Hillsborough metro. Fannie Mae's national outlook calls for roughly 3.6% in 2026. And looking longer term, Realtor.com projects Portland could hit a $1 million median price by 2033. If the current trajectory holds, here's how I see it. We've had nearly 80% growth over the last decade. A short-term correction now is healthy, and once affordability improves, history tells us we'll get back to that steady 2 to 4% annual growth path. Over the next 5 years, that could still mean total gains of 5 to 20%, just in a much more sustainable way than the rocket ship years of 2020, 2021, and 2022. So what are you seeing in your neighborhood? Are homes sitting longer? Are sellers cutting price? Drop a comment. I read and reply to everyone. If you're in Oregon, Washington, or Idaho and want a personalized strategy for navigating this market, click the link in my bio for a no-cost consultation. And make sure to hit subscribe because this video is just the start. I'm rolling out a full series breaking down the housing markets across the Pacific Northwest, Portland, Seattle, Boise, Salem, Spokane, Bend, and more. Each market has its own story, and I'll be covering all of them with the same real data and straight talk you've seen here. Thanks for watching, and I'll see you in the next market deep dive. Stay smart out there.